credit line, you get denied. It's very, very, very frustrating, right? You have so much hope that you can get approved and the thoughts of what you can do with that money. And then if it doesn't go through and you don't end up getting approved, it creates a lot of frustration. So can we stop this? The answer is yeah, we actually can. There's 8 things I would recommend to be able to stop denials permanently and to be able to learn how to stop them so they don't happen again in the future. Look, this is one of the things that we specialize here at Credit Suite. We help hundreds of thousands of business owners discover what's getting them denied and what to fix. As a matter of fact, it's really an obsession of mine, okay? I've spent my career digging into the reasons, the underlying reasons of why somebody gets really denied, talking to hundreds and hundreds of underwriters to figure out what their best kept secrets are, to find the actual credit reports that lenders are using that you probably don't even know they're using, and then how to control those credit reports to actually be able to get approvals. And today, this is like the accumulation of what I have learned. I'm going to show you like my 8 top tips for stopping denials so you can start getting more approvals and stop going through the frustration of getting denied for financing when you need it most. So one of the first is one of the most basic things you can do, which is to understand why the denial took place to begin with. Now, it seems simple on the surface, but the reality is for us, it's not. Here's why. You see, as a consumer, usually we're denied because of credit in many cases. And they send us a letter and they state the credit bureau they pulled and what happened and why they made the decision. But the reality is the Fair Credit Reporting Act that requires lenders to do that isn't applicable in the business world. Lenders don't need to tell you if they denied you because of business credit quality, for example. So what we find is a lot of times we do get denied financing and we just do not know why. Now, in other cases, they'll send us a letter. They'll tell us exactly what the reason is. So first of all, if they tell you the reason, then work on fixing that reason. If they tell you it's because your business credit's not established, work on that. If it's revenue, if whatever it may be. But in a lot of cases, they don't tell you that. In that case, you want to talk to your rep at that lender and try to drill down to an even underwriter, talk to an underwriter to figure out why you've gotten denied. Let me explain why this is so important. So I recently I bought a new watch and I went to get jewelry insurance and I got denied for the jewelry insurance, which is really weird. I've never had a claim against insurance. There's no reason for it. So I called them and said, why did I get denied? And they said, we don't really know why. And I said, well, that's fine. Let me talk to an underwriter. They said, we don't let people talk to underwriters here. And I said, okay, then let me ask you these questions. And I asked them 3, 4, 5 questions that no regular person besides an underwriter could ask. They finally were stumped. They said, let me put you with an underwriter. I said, great. I got with the underwriter. I said, why was I denied? She goes, because your Lexus Nexus, like jewelry score or insurance score is low. And I was like, I didn't even know I had a Lexus Nexus insurance score. So I was able to find it, pull it, look and see what the issues were, dispute, correct, turn around and get approved. Now, most people would never do that. Most people would get denied, never know why, and then never know. They just never got the insurance. They never got the result of what they were trying to get. But by talking to an actual underwriter and saying, what's going on? She said, here's the report we pulled. Here was the issue. And you know what she said to me? She goes, get the report, fix the issue, and reapply. Like the underwriter told me that. She literally not only told me what got me denied, but told me the exact steps I should take to get approved. So this is why you really need to understand the denial reason. Why are you getting denied? And just by asking if they haven't told you, and then by speaking to an underwriter, and if they tell you no to an underwriter, then ask that person questions only an underwriter can ask. Which credit report did you pull? Did you pull my business credit report? Did you pull my Lexus Nexus report? Overwhelm them with confusion. So then you say, see, that's why I need to talk to an underwriter. And they will, on almost all cases, direct you to an underwriter to figure out what the reason for denial is. Now, beyond that, let's fix the underlying reasons. Some of the most common reasons that we get denied for credit and financing is because of our business credit quality. Look, if you go get a car loan right now on the individual side, if you go get a mortgage, if you go to get a personal credit card, you and I both know that probably 9 out of 10 denials you're going to get are because of your consumer credit quality. But guess what? The same thing is true in the business world. And what I mean by that is in the business world, most of your denials are taking place because your business credit quality is bad. So if you want to avoid denials, if you want to exponentially increase the probability that you'll get approved, build your business credit, right? When you build your business credit profile and score, then you show lenders a history of your business paying its bills. If you pay your bills on time, you have a good business credit score. You've proven that all these credit issuers and lenders are giving you access to money and that you're using the money wisely and you're paying it as agreed. And all of that is as important to your business getting money as consumer credit quality is to you as a consumer getting money as well. So it's one of the basic things that a lot of lenders will tell you are getting you denied, and easily things you can fix, right? It's not hard to build business credit. And if you need some help along the way, then I will actually pull up right now our free guide that's been downloaded over 1 million times. And this guide will actually map out the steps for you to be able to build business credit. You can simply scan the QR code, or you can go to creditsuite.com/EIN to grab it. So build your business credit. Again, business credit quality is as important to your business getting money as consumer credit quality is to you as a consumer getting money. The next thing is what industry are you in? Do you know your own industry? Look, I stand on some really big stages with some really, really, really high net worth and high-end individuals. These business owners own 8, 9-figure businesses. And I am always surprised to see how many of them don't even know their own NAICS code, their own industry code. And here's the reason I'm so shocked and surprised. The IRS uses it to control audits. Insurance company use it to control if you get insurance and the rates and terms you'll pay. Lenders use it to determine if you should be approved, denied, and the risk class that you're in. The business credit reporting agencies use it to determine how high your credit score should be and how high risk or low risk your industry is. I can go on and on. Credit issuers use it to determine if you should be getting credit cards. So many people you are going to deal with in this world, from insurance to credit cards to loans to credit lines to everything else in between, to even the IRS and how you file taxes, is all based on what industry you're in. And it gets significantly worse because in a lot of these cases, they have what are called comparison scores. So the bureaus all have comparison scores comparing you to others in your industry. So if your industry is wrong, it's a complete mess. And 9 out of 10 times, it's wrong. And you know why it's wrong? Because you went to a bank, you opened a bank account. And when you open your bank account for your business, they said, what industry are you in? And you said something general. I'm in transportation. I'm in real estate. I'm in consulting, whatever it may be. And then that person behind the computer is trying to pick from a long list of industries that you may be in. They take their best educated guess, and you are now in that industry. Now, there's a third-party their data aggregator that is owned by banks that shares all the data between the banks. So when you go into Wells Fargo and you open that bank account, you gave them the wrong information, or they put in the wrong information, they gave it to Bank of America. They gave it to Chase. They gave it to Regions. It spread. Then the bureaus are vendors for this third-party data aggregator, and they take that data and they put it on your credit reports. So just because that person sat there and said what industry you're in, and you said something general like consulting, now all the banks think that you're in the wrong industry. Now the business credit reporting agency think they're in the wrong industry. Then every lender, every credit issuer, every insurance company that's looking at those business credit reports, they now think you're in the wrong industry, and it spreads like wildfire. And the problem with that is that you're going to get denied based on being in the high-risk industry when you're not even a high-risk industry. Now, again, good news, something super simple for us to fix. All we need to do is go to high-risk NAICS codes. We do a simple Google search. We look at high-risk NAICS codes, and then we figure out what is high-risk and what's not. Next, we go to NAICS.com. NAICS.com. And by going to NAICS.com, now we can look through their list of industries, and we can just simply choose the industry that is the best for what we do that is not high risk. Let me give you an example. Credit Suite. We could be education. We could be financial services. We could be software. Those are 3 easy industries you could say that we're in. But we like software. Here's why. Software gives us the biggest multiple if we ever exit the company. If we go to sell, we want the most money. Software gives us the best multiple. But software is not high risk. But guess what? Financial services is high risk. So by choosing software, we choose a low risk NAICS, a low risk category, and we also have the best chance of exiting the company for the most amount of money. Ching, ching, win. That is our industry. Now, once you know your industry, if you have done this and you're already in business, you got to go backwards. When you file taxes, go to your accountant and say, hey, Mr. Accountant, Miss Accountant, I have noticed on my tax returns, my industry is not right. Here's my industry. Can I go back and update this with the IRS? And they will help you do so. Next, pull your business credit reports. Go to Dun & Bradstreet. Go to Experian. If you're a Credit Suite client, you get lender reports with Equifax as well. Look up those reports. Is the industry code correct or not? If it is not, then go and make sure that you correct it with those bureaus. Now we've backdated and we've come up with the right industry, and we know with backwards forward, it is now correct. So the next thing that we want to do is now whenever we go to file for anything, whenever we apply for anything, insurance, loans, credit lines, credit cards, set up a business credit report, in any of those things, when they ask what industry we're in, we say exactly what it says at NAICS.com. If it says software publishers, NAICS 511312, that's exactly what you put on the application every single time. What industry are you in? Software publisher, whoop, parentheses, NAICS 511312, into parentheses, right? So I'm literally putting the NAICS code and the actual definition of the industry in that field. So now there's never a confusion. When I go to open a bank account and they say, what industry you're in, I say, I'm a software publisher. And by the way, if you're looking through the list, it's NAICS code 511312. And now they're going to say, okay, now I know. And there's no chance they're going to get, there is a chance, but there's little chance they're going to get it wrong, because moving forward, now you've told them the exact industry as it's listed with NAICS, and you've also come in and given them the actual code for less room for errors. Look, a lot of people get denied because of industry, and you don't have to. You just have to know the industry you're in and make sure you're applying the right way moving forward. And by the way, our Lake, thanks for coming in, and Ed Jal, thanks for coming in. Hello, Credit Suite family, I appreciate it. Pierre Robert, thank you very much for coming in. And if you're just coming in, give me a shout out. Tell me your company name, and I'll give you a shout out right here on the stream. Now, the next thing is increase the collateral that you have. Lenders love collateral. They love having an asset that they can hedge their bets to be able to give you money, knowing if you do something dumb and don't pay them, they can maybe have a better chance of going and grabbing that asset. So anything you can pledge as collateral exponentially increases the probability that you're going to get approved. And don't get me wrong, this isn't always the case. If I go to get a credit card, it's unsecured, which means I don't need collateral. I'm good. But for most kinds of loans or credit lines, if I have some kind of asset that can pledge collateral, they are happy with that. So a lot of things can work: stocks, bonds, 401ks, IRAs, real estate, vehicles. But there's some other things you might not think about. Inventory could be used. Equipment could be used. And account receivables could be used. Account receivables, or AR, is the number one kind of collateral used to qualify for SBA loans. And what AR is, or account receivables, is like when you sell something to a client and you let them pay you over time. So for example, if you get started with Credit Suite and you want us to help you build your business credit to get 80 Paydex scores and be able to start building business credit profiles that make you more lendable, well, then instead of making one payment to us, we can spread your payments out over 7 or 8 months. That is what an account receivable is. Instead of you buying and giving us all the money at once, we let you pay it on terms. You're financing with us, not an outside finance source. And that becomes an asset to Credit Suite. So now we have eventually $1 million, let's say, in AR. And now whenever I go to apply for a loan, I have that as collateral. So if I'm trying to get a $300,000 SBA loan and I have $1 million in AR, obviously it's going to make it way easier for me to get approved because I have collateral to offset the lender's risk. Now, the other thing that we want to focus on to stop denials is addressing specific, just structure concerns. I talk about this all the time. Is your business just structured the right way, right? Do you have an LLC or a corporation? You should. Do you have a separate address for the business that's not a home address and a PO box or an iPostal address? You should. Do you have a phone number for the business? Is it toll free? You should, right? Do you have a professional website? That is a huge thing for 2023. Last year, we saw this significant increase of denials because lenders didn't like the website somebody had. They weren't professional. So get a professional website set up. If not, it'll get you denied. And I mean, that continues to be the trend in 2024. That is a big thing that lenders are denying business owners for. Make sure you have a professional email address, info@creditsuite.com, not Gmail, right? Make sure all your information is congruent everywhere online that it's listed. Get a license for your business if you could get a business license of some sort, like your county. Make sure that you actually come in and you set up a separate bank account for your business. Your business should look credible. When somebody looks at your business online and searches it, they should see all the information being the same. They should see a toll-free number. They should see a real business address where if they did an images search for that, it looks like you're in like a real reputable commercial or retail location. All of those things go a long way to helping you actually build the rapport that's needed so you can actually get approved. This is where most people get denied. I mean, over like 60% of applications get denied right here because you just don't even look legit. Your business doesn't even look credible. So you've got to make sure that you set up that business where you absolutely look credible. And I've got A, B, C, D, E, F, G, H, I investing from New London, Connecticut, coming in the house. Thank you very much for coming in and saying hello. So the next thing is you really want to consider building relationships with your lenders. And here's what I mean by that. It's not that hard to do. When you get to a point where you want to start applying for Chase, Bank of America, set up bank accounts with every single one of them. Set up accounts at the national banks, right? Let's go to Chase. Let's go to Bank of America. Set them up in the regional area that you're in as well. Go get some credit union accounts. Yeah, I'm telling you to open 5 to 10 bank accounts because it works. Your probability of getting a Chase credit card, a Chase loan, a Chase credit line is significantly better if you have a bank account with Chase. I legitimately have loans that I've gotten only because they forced me to open a bank account. Okay, I had a loan on a McLaren. They made me open up a bank account for some credit union in Alaska, right? So again, it works. By having bank accounts open with the bank you're applying with, it goes a long way to actually helping you get approved. So go start with the national banks, go to the regional banks, go to the credit unions, have 10 bank accounts open and have some transactions. Transfer money from one account to the other, make some deposits, make some withdrawals, show some activity. I'm not saying you need to put 10 grand in each one of the bank accounts. You don't. You can start with $100. Then let them show some activity, money coming in, money coming out. Okay, because that will give you an exponentially better chance of getting approved when they know that you already do your banking with them. Okay, the other thing that you want to do is make sure you revise and review your application. When you are filling out an application for credit or financing, pay attention to every single field that you are filling out and know that in almost all cases, it's all being asked for a specific reason. So what I mean by that is if they're asking like what your revenue is, don't just make something up. They're probably going to go verify it one way or the other. Make sure it's accurate. They may be just asking you that to see how honest you are. I had an SBA loan where they said, have you ever been convicted of a misdemeanor or a felony? I was like, no, I'm a pretty straight shooter. And they came back and said, sorry, you've actually been denied for you've actually had multiple misdemeanors. And now you need to explain why you lied to us. I swear that's exactly what they said. Why did you not tell us the truth? I had to pull a background check on myself to even see what they were talking about. And I realized that back when I was like in my early 20s, I was in the Air Force. I saw some attractive police officer. I was trying to get her phone number. I was doing wheelies on my motorcycle, all dumb stuff that 20-year-old kids do. And now here I am like 20 years later, and that comes back up. I haven't even thought about that in decades, right? But because I told them the wrong information, then all of a sudden now I have to explain it and almost got the loan denied. The reason I tell you the story is that they ask every question for a reason. And oftentimes the reason that they're asking is to make sure that you are truthful and honest with them about the answer. I wasn't trying to deceive them. And I even said that. I said, I wasn't trying to deceive you. I didn't even think about these things. These things happened 20 years ago. I had to pull a background check on myself to even see what it was. When I did, I realized what it was, and here's what happened. So I even had to explain why I didn't give them accurate information to begin with. So make sure that you are coming through and look at every single thing you're putting on an application and think about why they're asking you that question and make sure that your answer gives them the best reflection of your company and your ability to repay them that you possibly can. The same with documents. No lender asks you for documents just to ask you for documents. If they're asking you for whatever they're asking you for, they're asking for it for a very specific reason. If they are asking me for my last month's bank statement, well, they're probably wanting to make sure that I manage that bank account responsibly. I have done this before. In the early uses of my business where my bank account statements were not good, and a lender asked me, and I looked at them and I said, oh, man, this ain't good. I didn't apply. The next month, I made sure my bank account statement was good. Then I applied a month later when I had a good bank statement. So do the same thing. Look at it. If they're asking for tax returns, are you showing a profit or a loss? Try to show a little profit if you can. It goes a long way. Do you manage your bank account responsibly? Everything they're asking you for, they're asking for it for a reason. So make sure your income documents are clean, that your documents are clean before you send it to them. If they're asking for an aged AR report, they want to make sure that I have a grasp on my account receivables. If I don't have a grasp and it's a mess, I'm going to go to Fiverr. I'm going to go to Upwork. I'm going to hire somebody to help me clean it up. Then I'm going to have a clean aged AR report to send to them. You might not know what an aged AR report is. That's okay. It doesn't matter. All I'm trying to say is that whatever income documents they ask you for, whatever documents they ask you for, they're asking for a reason. So what you really want to do is you want to make sure that you review those documents before you send them to them. Make sure that everything on those documents makes sense. And then if not, don't apply. Take a step back, get your income documents or whatever you're sending them cleaned up, and then apply at a later date where you know that what you're looking at looks good and it may look good to them as well. And another thing, you need to know the credit reports these lenders are using. One above all else, it's called LexisNexis. Look, the worst mistake you can make right now is to leave this stream and not know how to, or not take an action to have gotten your LexisNexis credit report. LexisNexis is, you'll often hear me describe, the root of all evil. That's a pretty big statement. I literally say that LexisNexis is the root of all evil. Why do I say that? Because it accounts for it all. It's why you get denied for everything. It's why you get speeding tickets. It's why you get denied insurance. It's why you have a hard time. It's why you pay the amount that you pay on your car insurance now. It's why you get denied for loans or for credit lines. It's the root of all evil. It's where they get all their data from. Everybody. Look, consumer credit reports, judgments, bankruptcies. This stuff doesn't come from anywhere other than LexisNexis. If you ever had a credit report where you tried to dispute a judgment or dispute a public record or dispute a bankruptcy, and they came back and said, oh, I'm sorry, it's verified. You know who they verified it with? They verified it with LexisNexis. That everybody is getting their data from LexisNexis. So what you should be doing is you should be getting LexisNexis and making sure that you are cleaning it up. So many people say to me, should I freeze LexisNexis? No. You don't want to take any action to let them know that you know what they know. Okay, they think they're pulling a secret credit report you know nothing about. So get one up on them. Go get the credit report that they think you know nothing about and start cleaning the thing up. Go through page by page by page, and anything that you don't like, dispute with LexisNexis and get it corrected or get it completely removed from the report. We were started to get denied from merchant accounts and bank accounts because we were in credit repair. I'm in business credit building. I don't even deal with consumers or consumer credit. Then I pulled LexisNexis, and LexisNexis had all these associations to another credit repair company I used to own and sold many, many years ago. So I disputed it with LexisNexis, and they removed it. And I never had problems again, never once. I got merchant accounts, I got bank accounts. Nobody ever came back and ever said that I was in consumer credit because all of the place where they got it from LexisNexis, I actually cleaned up. I applied for an SBA loan, and they wanted to collateralize my home. I was like, that doesn't make sense. Well, I found out that there was judgments on my LexisNexis credit report that were not even accurate. And when I wrote to LexisNexis and proved it to them, they removed the judgments, and I never had those issues come up again. All of the problems you are experiencing are coming from LexisNexis. So get your LexisNexis credit report. You can go right now and Google free LexisNexis credit report. You fill in your information. They will email you a password, and they'll give you a link, and then you go to the link, you enter the password, and you can access the whole report. My report is almost 400 pages. Think about that. Your consumer credit report's what, 10 pages max? It's 400. That's how much stuff is on your LexisNexis credit report. Every address you've ever lived at, every phone number you've ever had, every email address, every company you've been associated with, every vehicle you've ever owned, the VIN numbers for the vehicles, every insurance policy you ever had, every speeding ticket you've ever had, every conviction of anything, any license that you've ever had issued, any license you've had revoked, the house that you live in, the building materials of the home, the homeowners association, how many stories is your home, how many garages does it have, what materials did they legitimately use to build the home, what title company did you use, what loan did you get on the home for the mortgage, what interest rate did you pay. 100% of that data and so much more is on LexisNexis. It's like your entire life's history. Literally, I pulled up my addresses. My address showed from when I was in boot camp. I was only there for 6 weeks, and my boot camp address showed on my credit report as well. So you need to get LexisNexis, and you need to clean up that data. Dispute, get it fine-tuned. Mine is a work of art, and that's why I don't have a hard time getting financing anymore. I legitimately, without exaggeration, we applied the other day for a $100,000 credit line, and it took us a day and a half. It was like Not even 48 hours. It was like 30 something hours. They approved us for a $100,000 line of credit. Would you like that? That's how we do it. I go to Lexus Nexus where they get their data. I clean it up. Then I know that they're looking at what I want them to look at. Now I have a significantly better chance of getting approved. And by the way, obviously, get Dun & Bradstreet, get Experian, get Equifax business credit reports as well. Know what's going on those reports and make sure that you're keeping an eye on those, disputing anything that's there, continuously building business credit as well. And the last thing I want to tell you to stop denials is explore alternative options. Look, you might not be to a point where you can get approved yet. May just be the way that it is. And what I mean by that is that your business might not be ready for SBA loans yet. You maybe don't have enough tax returns, don't have enough established business credit, don't have good enough consumer credit. But let's not forget about alternative lenders. Alternative lenders will lend you money based on a business strength. So what I mean by that is that there's three main strengths that lenders and credit issuers care about: cash flow, credit, and collateral. These are the things that will make you lendable. Now, if you don't have all three, then stop trying to apply for SBA loans and look at alternative options. Look at which strength you do have and go all in on that strength. If I have regular revenue, then go apply for revenue lending. If I have good personal credit, then go apply for a type of financing that's just based on personal credit. If I have good revenue, or if I have good collateral like stocks, bonds, equipment, then go get financing based on that collateral. And let's not forget about personal loans. I know, right? I get it. You're building a business. I'm not telling you to try to take personal funds and use it for business purposes. But what I am telling you is that if you're launching a new business and you don't have revenue to qualify for revenue financing, then go to a place like Credible. Credible works with like all different kinds of lenders in the personal space. And what Credible will do is Credible will actually send out your applications to all of them and will pre-qualify you for sometimes 5, 10, 15, 20 different kind of personal lenders. And this might be great for you as a brand new startup business because you don't have revenue, but you might have personal income. So use your personal income to get the loan you need to get the business off the ground. Is it risky? Yeah. Building a business is risky. Using a home equity line of credit, getting a personal loan, using personal credit cards to fund a business can blow up in your face. It's happened to me. My credit's been horrible, way more than it's been good from the risks I've taken as an entrepreneur. You could probably relate, right? So the reality is, don't forget about those options as well. But there's a lot of alternative lending out there that's available way easier than what you're actually going to find on the actual side, where if you don't have revenue, then you get personal financing. If you don't have good credit, then stop applying for SBA loans. Focus on the strengths you have and get money based on that. And if you want the best option to be able to find alternative ways to be able to get funding to grow your business, I'm going to throw up a QR code right here. You can scan the QR code, or you can go to creditsuite.com/27, the number 27. And that will give you 27 killer ways to get money to grow your business. A lot of business owners don't even know that the funding options in this thing even exist. So many people wanted to know like what all these options are that are out there. So I literally wrote a book and I'm giving it to you with all the best funding options, 27 of the best options I found for good, for bad credit, for startup, for massive millions of dollars of expansion. That guide will get you to a lot of alternative sources that can help you as well. So there you have it. I know. I promised you 8 different ways to stop denials. I gave you like 12. I can't help myself from under promising and over delivering. But now you know this is exactly how we stop denials. And once you do that, it might be a little bit of work to do these things. But once you do it, then you get the windfall of approvals that you really deserve to have without the stress. You get to a point where I luckily am now, right? Where I took all these steps and now I can get a $100,000 credit line in less than 2 days. Pretty cool to be able to do that, right? You can get there too. It's just understanding what gets you denied and fixing these things. And guess what? On everything we talked about today, these aren't complicated fixes. These are simple things that take a little bit of time from you to go do it. So if you missed any of the stream or came in late, go to the channel that you're watching this now and go back and watch from the beginning. LinkedIn, YouTube, Facebook, it will all be on the page on the channel you're watching. Go back, take notes, and take actions on these things so we can stop denials and get you the money that you deserve to have and the money that you really need to have to be able to grow the business of your dreams. Thanks for tuning in. I look forward to seeing you next time. We talk about more cool ways to get the money you need to start and grow your business.